Hello, hello, hello. I'm gonna get going in a couple minutes, guys. I'm really excited for everyone, and I appreciate everyone. And give me one sec. I'm gonna make sure that everything's set up. Hello. Yeah, and I'm gonna introduce you guys to like the little panel because obviously I'm sure you're getting. Oh yeah, everybody's like, what up? Cool. I hope all of you guys are so amazing. And I'm sorry about the music, Gareth. I don't know what was up. I have no idea what type of music plays in any meeting. Um, let me see what's going on really quickly. Oh, the waiting room music. Yeah, it's live. I'm really excited. And for the people that are getting on, I'm giving the options for you guys to be um, unmuted. And let me see if my mic, that's what I was just about to ask you guys. So I want to make sure everything works really well. As long as my mic is working. So I want everybody to give me like a yes if it sounds good. If not, I'll try it without headphones to make sure it sounds really good. So just let me know what's up. Cool, sounds good. Hey, Candace, my favorite Cali girl. Cool. Okay. Yeah. How's everybody? Hope all of you guys are awesome. Everybody's excited for Christmas. This is my last webinar and last like work night until probably like, hey, my favorite birthday girl. Um, this is my last work night up until shoot. I'm probably gonna take a break for a while. So really just kind of like I'm really excited because I wanted to give something that people have been asking for, obviously. Everybody's been like, yeah, like please, host a webinar on how to flip the accounts and, how to do this exactly. So I'm really excited to kind of go for it in this webinar and just kind of teach you guys. Most of you guys are pretty experienced traders. Some of you have private coached with me. Some of you are just, like I said, already great traders and you just kind of are looking to brush up on your, I guess your skill set. And whoever just unmuted themselves, if you could mute yourself until Q&A time, so if everybody can make sure that they're muted, I only see two people who are unmuted and I can tell you. Let's see. Oh, I only see one person now. As long as you're unmuted, just make sure that you are. I mean, that you're unmuted. So that it doesn't interrupt during the session. But I will open up for Q&A and kind of to give you guys a little bit of a, I guess, what would you say, so you can know exactly what we're going to be going over. I'm going to go through topic by topic. So I'm literally going to be walking through kind of like the 5 steps that it really takes to flip an account. And I'm not going to be talking from a specific scenario per se. Like, let's just say I'm going to be giving you, I guess, what would you say, all the steps that I would use personally to go ahead and take a small amount of money and then, make it large. So that's really the goal of it. And what kind of got me back to it was that I was making a lot of money, in trading. Just, I started with small accounts when I first started trading, but then when I got to bigger numbers, obviously that was when I started trading higher amounts of money. So I was making, a couple stacks a day and it was feeling great. And I was like, dang, if I can do this the rest of my life, I'm going to be a millionaire by the time I'm 21, 22, which I don't doubt, but what I realized in that was that I also was having days where I was losing just as much. So, I was on, money highs and lows, making a ton of money, losing a ton of money. And what got me back to really thinking in the mindset of take small amounts and make them large is that that's what you do in any business. So, most of you guys are entrepreneurs in some way, and that's really the business model that you always want to carry. Because I don't believe in just being, like I said, having one stream of income and that only being one thing. So for me, I don't look at myself as just like, oh, I'm some trader. Trading is what I do right now, and I coach. But for me, I want to be a multifaceted, entrepreneur and have different streams of income and different things going. And what it always starts with is starting with small. You can do anything small, you can do anything big. But at the end of the day, small amounts of capital, they create big rewards if you know how to use them correctly. And that's really what I kind of wanted to get back to towards the end of the year, just kind of humbling myself and working on specific strategies to do so. And so it took a lot of patience. I had to really become patient again because I was not patient. I was kind of like arrogant and I was just like, boom, 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 like, let's make money kind of every time I got on. And then it started to, affect my accounts. And, obviously, once I got back to basics and skill set and what does it really take to grow any amount of money, because realistically you can do 100 to 1,000, you can do 1,000 to 10,000, you do 10,000 to 100,000, you can do it, you do 100,000 to a million. So a lot of people do not have some of what we're going to be going over. Whether, like I said, the biggest piece in trading is that we all have skills, and so your skills have to be refined. And once you refine your skills, then it's really filling in each gap. That's one thing that I say a lot, is that you have to fill in gaps. You got to fill in life gaps. So for somebody who's if you're a great technical analysis trader already, let's just say, and you have something that's working for you, but if you're not profitable, why? That there's a gap in your life somewhere. Maybe you're impatient. Maybe you're not functioning at your highest in your livelihood. Maybe you don't have any spirituality going. All these different things. If it comes down to your money management and you're impatient, those things go back to your psychological. So there's all these different pieces that I don't think get touched on enough in trading, and people are just like, hey, create an account and go for it. You're going to be rich the next year if you hire a coach, and boom. And, we want it overnight. And the biggest piece is, like I said, refining skill set, refining mentality, refining everything that we're going to go over. And pretty much I'm going to kind of give you guys like I said, 5 steps for, I want to make it as simple and sweet as possible. So 5 steps to kind of what it takes to really flip your accounts. And I'm going to be walking through different scenarios. So what I will do as I'm setting up my screen share, I'm going to try to run through. I try to be very time oriented because I know we all have schedules and stuff, and trust me, I'm tired from my day, so I want to make sure that this is as power packed as possible. I want it to be a powerhouse, and I want you guys to get what you need. So I am going to open up for questions, totally, and I'll stay on as long as needed, to make sure that everyone does get their questions answered. And then the whole thing is to try to be mindful of other people. So if you see someone asking the same question as you, don't type the question. Just let them, ask it. And if your question's a little bit different, or if there's like something that you need to add on, feel free to do so. So type your questions in as I'm talking, and what I'll kind of do is keep the question box towards the end of the session. And so basically, let's see, I'm going to start getting set up here. And if you guys have any questions before I get going, cool. You can definitely start to type them in. It's all up to you. Facebook too. Let's see. Oh, TradingView. And I'm going to be working from TradingView tonight too, because a lot of people have been coaching with me. You guys know this, because I pretty much have found that it's a lot easier to teach from, and it's really cool. It's a cool setup and a cool vibe to it. So go ahead and start to get your notes out if you've got them. If you need them. Be about 1 minute, guys. I'm just making sure everything's set up for you. Perfect. All right, let's see. Screen share is on roll. And then I'll just check. Hey, what's up, Tia? Just look back at my little. Cool. Okay, so you guys let me know if you can see my screen. So I want to make sure that it is seeable. Here in my chat. And once I see someone say, yes, you can. Cool. All right. So we definitely can see my screen. All right, so we're going to get moving through. It's 7:10 now, so I'm going to try to touch every topic, as quickly as possible, but, to make it as effective as possible, too. So we're going to start with number 1, because number 1 is a big one, and number 1 is one of the most important things out of everything that we're going through, so that's why we're going to go through it first, because it's going to take the most time, etc. So all price action skills must be excellent. So kind of like what I said, all your price action skills have to be refined. I'm not familiar with every person on the webinar, so I do not, and for people who are watching it recorded, I don't know if you use an indicator, if you use anything specific or you have some specific strategy to your trading. What I do know is that foundation is key, and it's anything foundationally that you're trading with, you need to make it as simple as possible. So anyone who's learned from me knows what true trends are the first thing that you really have to know. And I cover it a lot in videos, and I cover it a lot in anything that I'm teaching. And really, I kind of made this little thing up down here because I wanted just to cover this as I was going. So I always figure that drawing out makes it as simple as possible. And so what I want you guys to know is that if you're trading and you're trading counter trends, or you're trading consolidation, you're trading sideways movement in the market, this is to make any amount of money, like let's just say in trading, whether it's a small or big, any trade you're taking, you need to be trading with trends. So trending markets are what you want to be trading. Now, realistically, we know that the market is not moving in trends all the time. Actually, the market is consolidated about 75% of the time. So, that little 25% that we're actually seeing the trends, we have to be on top of our game to do that. And so identifying with them, though, what makes a true trend? A lot of people, they identify with trends as, oh, the market's shooting up or it's shooting down. And so they're ready to jump in on a trend because we hear people saying, what? The trend is your friend, so trade that trend, And that is one of the biggest misconceptions in trading because your entry is so important. When you have a solid entry in trading, you eliminate pretty much all of the stress that comes with trading itself. And so basically by knowing what a true trend is, you're going to eliminate a lot of the harder things about trading because it's really not that hard, like I said. So basically for your uptrends, if you haven't heard it before, higher highs and higher lows. So anyone who coaches with me, or anyone probably in my group, you're going to know that I preach that. And I drew it out because I wanted you guys to see, and we actually have a trend. This is NZD CAD, but it's in an uptrend itself right now, so it kind of makes sense. And basically over here, I drew these little line squiggly thingies out for you guys so that you could kind of see. So the structural movement of an uptrend over here. So what is a low? Low is the lowest point that probably price is at, so it kind of creates that little valley. So here's your first low, here's your peak, here's your higher low. So a higher low has to get created structurally for you to even begin making an uptrend. So when you're watching the market, those lows that get created, that's when the market pulls down, and we kind of can see it live over here. The market shot up earlier, so buyers, push price up. And then what do we see? Red candlesticks pulling us back. So red candlesticks pull us down. There's your higher low right over here. So just like how we shot up over here and then created our higher low right here, same exact structural thing. So when that happens, those are the key points that actually create your entries. So a lot of people, though, they're getting in here, they're getting in, let's just say here, they're getting in here, they're getting in all crazy places, and they have no type of aim for where their entry should be. So if I was getting ready to trade this trend over here, I would have wanted to be in down here. Now, would it be bad to get in the middle? No, not necessarily, because it's going to go make a what? Higher high. That's your next point. So a higher high has to get created on your uptrends. You got to be making those, because if you're making them, that means that what? Buyers are pushing price higher. So they are in more control. That is what a trend is. And the best way that I always give this little analogy is if you think of an iTunes artist. When an artist is trending, they are the most popular artist in iTunes. They are not the only artist in iTunes. They're one of the most popular. Same thing in trading. When a trend is happening, they're what would you say? They're they're in more control. They have more power, more volume. There's more of them. So they are winning for that time period. Can an artist stop trending in iTunes? Yes, that is usually when trends end. They stop. So basically, when they're pulling back, they're what? That means the sellers are coming against them a little bit. They're pulling them down some, and then boom, next time we shoot up. So we go make a higher high. So consistency within your trend has to do with what? Higher highs and higher lows. You want to know that. You want to be able to really identify with that no matter what you're doing, because if you can, you're always going to protect yourself from not getting in a trend that you maybe thought was one, and then it's not, it's no longer a trend. So that would be the first piece for your uptrend, and then vice versa for your downtrend. So over here, we just have the opposite. Downtrends create your lower lows and your lower highs, and some people may say lower peaks and lower valleys. So, basically it's just the opposite. You have you have your high here, your low here, your lower high here, your lower low. So in a downtrend, sellers are more important because they are the trending party, which means that they need to be taking price lower. The minute that lower lows do not get created in a downtrend, it's no longer a trend. Same thing for your uptrend. The minute that a higher high doesn't get created, it's no longer an uptrend. So what you need to do is always be patient and wait for that trend to continue. You want to know that you're trading a trend. So this is where we'll get to it in a little while. The number 5, patience, comes in because a lot of people are jumpy. They're jumpy. They don't want to wait. I see that a lot, and it's just like one of the most frustrating things in trading is being patient. So we're going to cover a whole lot on that towards the end because that's going to be huge for you guys, especially with the mindset towards taking small amounts and making them big. Because, when you have a little bit of money, you're starting with a lot less, which means that you're capable of losing that little bit very quickly. So the whole goal is maintain your position. You want to do that, and that'll come. So first things first, got that covered, true trends. So you guys really need to be able to identify with that. Now, what I'm going to do here is kind of come over here, and we're going to move to structure. So structure, what is structure? A lot of people are confused because structure has a lot to do with pretty much support and resistance. So I kind of put structure and SNR because they both run together, really. Structure in your market is one of the biggest pieces to your trading. If you do not understand structure, you are not, I don't want to say that you're not going to be a great trader because I know some people who just trade with indicators and they make money. So what I will say is that if you don't know structure, you don't really know how to trade, though. That is a big piece. So some people are making money, but some people do not know how to trade. A lot of the times what happens is that we get caught up in all of these, like I said, people want to pay me. Most people want to pay me for a strategy versus learning how to trade themselves. They just want someone to tell them, hey, click the button when it does this, and boom, it's going to pop up in magic. And at the end of the day, like when you really understand what the market's doing, you're going to be your best self. You're going to be your best, you be the best trader you can be mentally because you understand from the place of what the market is showing you. It's like a person. The better you get to know it, the better you're able to understand why it's reacting certain ways and why it's doing certain things when it, let's just say when it pulls back and then it never, the trend stops. You're going to be able to understand that because of the market's structure, just no different than how we are structurally made up as people. So once you get to know a person, you know certain things about them, the rhythms, the patterns that they have, the different things that they do consistently and stay consistently, and that's how the market is. It's always talking. So one thing that I learned from a book that I was reading, it kept saying structure leaves you clues, structure leaves you clues. And it started to speak to me. I was like, structure does leave you clues. And what I'm going to show you guys is why I drew out these little things right here. I want to show you how structurally the market does leave you clues. So support and resistance, this is where it ties in. Most of us got taught support and resistance, and we learned it from the basis of basically that support and resistance was this. Where's my arrow? All right. It was when prices consolidated, you draw resistance from above, right? And then when prices consolidated also, you're going to draw that support from the bottom. So this is what we learned. We learned like, okay, price will bounce in between. So, boom. I'm over here creating ugly arrows. Boom, it might come a little bit beneath the support, but it didn't break it fully. Those are just wicks. Boom. So, price is bouncing in between. This is kind of what we learned about the market and where we use support and resistance at. But no one really ever kind of taught that the market actually has structure that goes with that support and resistance, and that usually price recreates its own patterns and it just looks different. So a lot of us are looking for the market to look the same always. We think that, when we see support and resistance, it's supposed to wick perfectly, and it's supposed to touch this line 3 times, and when it touches 3 times, it's magic, boom, it's going to reverse, and that's not the case. And so what I want you guys to know is that support and resistance isn't just used for consolidation. It's not used for just that at all. What you really want to know is that support and resistance is this. It moves through your chart, and it connects with old places. You see how structurally one was an uptrend and one was a downtrend, right? So this is an uptrend, this is a downtrend. funny how price plays a support over here and support over here, right? So really, when the market is going through, if we want to think of it from beneath, if we look at the market from down here at this low, it had to break past a resistance point, and then it used that resistance point, well, that what was once the resistance, to become its what? Support. So after it broke through that resistance, kind of like breaking through the ceiling, price broke through, so it creates its high right here, and then it pulls backward, and it uses that same point to kind of revisit it before it goes to the next place. And so kind of what I always say, that pullback usually pulls right back to a place that it was once at, but it's now on top of it or now beneath it. So in this uptrend, we revisit. Isn't that a structural type, isn't that in a structural manner that it follows the same pattern? So if you notice, and what I'm going to do is actually switch my charts, and I'll go to a live chart, or actually what I'm going to do is pull up two screenshots to show you guys, because I do this to make it faster, two screenshots to show you guys how price, when it is trending, so it follows those same rules. So not just looking at my little squiggly lines that I'm drawing because they're perfect. I want to show you with real price, with real charts, what price follows. So you can see that uses the same place. Same thing for over here. Follows the same structural behavior as resistance. Oops, that was a really crazy line. Both of those play as resistance, right? So this could have been a month later. This could have been, 2 weeks later, and you see it on your charts all the time. What I'll encourage you guys to do is kind of really look, because a lot of the time what you're going to see is that price actually follows it like this. And I'm pulling these down so I can show you what I'm about to do. So price really follows it most of the time in this manner. When it's going up, you see how it follows and it breaks through. So this next time, follow me with the uptrend. After we got the support, we break through the new resistance. So it goes to create its new high, and then it pulls back. So what was once the resistance became the what? Support. And usually what you're going to see is that the old peaks and the old valleys play as support or resistance. So usually you're going to see that it starts to create this little pattern. Every time the price is going up, it shoots to make a new high, pulls back down to the old resistance as support, breaks through that, then it goes up and does the same thing. It keeps creating that same pattern. So if we follow, when the trend reverses, really it's the same thing. You're coming back and you're seeing what? When we go down, we're going to break through what? What was once a what was once a support? They're going to fall to a new support. Retest that old support is what? Resistance, because now we're downtrending. So what was once our support becomes the resistance. Where do we create that new lower high at? Structurally, price must go back and visit those old places that it once knew. So you almost want to think of it, and this is the way that I teach any students that I teach, you want to think of price as like moving through a map, kind of. And so when it's moving through that map, I don't know if any of you have gone hiking. If you go hiking, you place little stickers everywhere that you go, kind of. So if you're going on like a long hike, you want to kind of know when you're revisiting if you were once there. And that's what price does. It kind of leaves those structural clues. So that's what peaks and valleys are, really. When you see those, I bet you that 9 times out of 10, you can go pull like a little line and recreate a structural movement in your chart, and you're going to be like, wow, price wicked here. Price, candlesticks were on top of this. It was using it as a support one time, or it was using it as a resistance one time. And this is where you start to see where price has the possibilities of stopping, and then where it has the possibilities of breaking through. That's all support and resistance is. Structurally, it has to move through. So what goes up must come down. What goes down must come up. And it moves through with that structural rule of what? I have stop signs. So even though I'm moving and I'm traveling, I'm going to get stopped somewhere. Guess what? I can draw a line and look through the past. And Eli's messaging me and says he loves me, and I love him too. Price can move through the past, and what you can see is that it's going to touch those same places and be able to use them as support or resistance. So basically, I'm going to give you guys 2 examples of that, and it should make sense. And I'm not here to teach, like I said, a whole webinar on structure, because I really could. That is how essential or quintessential it is for you to really, really, really master trading. You want to have that down. So if you do not, if you're currently not super skilled in that, gotta get it. Because if you don't, you're going to have a hard time with really following the market for what it's doing, and you're going to have a hard time with catching on with when a trend could start and when it's going to end and when you should get back in, and when, you're not going to be able to identify. So trends first, structure second. Let me get my screenshot real quick. Let's let's see. So we have uptrend. And is it choppy for you guys still? Because I literally just looked back at my little lesson and I want to make sure. Okay, so everyone's saying it's certain people's Wi-Fi. So if it's your Wi-Fi, guys, you might want to connect to something that's going to be a little bit better. Because a lot of people are saying that it sounds good for them. So some people just may have some messed up ones. But if not, you'll be able to get the recording. So don't fret. So let's see real quick though. So let's go with this uptrend because I want to show you guys to kind of tie some things in so you guys can see this really, really well. So this is support and resistance, used and structure used. And what I want to show you is that every place that it's using, and I'm going to pull up my downtrend one too because I think that was pretty good. I don't think I have support and resistance, so we'll roll with this one. So basically, let's start with these lines over here. So your lines are meant to show you, they're just stickers, they're markers. So if we look back, look at this. I have support playing at the bottom. See how price is touching from long ago. So we get wicks all the way down there. And what I want you guys to know is that there's no perfect line you're going to draw, period. There's no perfect place that you're going to be able to put your support or put your resistance. Price is meant to, it's just a sticker. It's just to show you where price was once at. So any place that you can find a confluent place, or like I said, a similarity of price hitting that point before, it's telling you, it's leaving you a clue. So literally we look over here to where we get our first what? Higher low, and then let's scroll backwards. So we see what? It plays as a support right here, a resistance in here, a what? Major support in between. There's a support, there was a support back there. The little fine people thing is blocking it off, but there was a major support back there. Then we go up, and we bounce up, and we go create a what? A higher high, right? So look at in between where we create that higher high. We put a line there as a sticker just to see, has price ever been here before? Answer is yeah. You look backward, resistance, right? So are some candlesticks going through that resistance line? Yes, because my line is not a magic line. Price doesn't have to follow the line that you drew. It's near, you put the line there to show you a similarity. So you're really just using your lines as kind of like a marker. Like I said, it's like something to say, okay, when price comes to this point, beep, I need to remember that it has two possibilities of doing what? Reversing or breaking through. Technically, since we are uptrending, I think everyone would agree, we should be following what? Probably she's going to reverse here because we see resistance, 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 support now. So it plays a support over here though. Support, support, and then resistance all through here. So, and whoever just unmuted themselves, please unmute, please. Or please mute. My bad. But basically, yeah, so you're going to see that. And what you're going to see is that kind of follows that same rule. So it pulls down. Notice that what was once a resistance for price becomes its what? Support. So the higher low gets created right at that similar point. Support, support, what? Support. So all through there. So very similar. Price goes up and makes a what? Higher high. These other places were highs in between. Here were highs, here were wicks. All these places are playing as resistance. So they're telling you something. Price always leaves its clues. Structure leaves you clues. So use them. See how price makes its way through? Once it pulls back down to create that higher low, guess where it stops the next time? Creates the same high. Falls back to a previous support. Then it goes up to make a new high. Guess where the new high is at? Right here. We follow. Resistance, resistance, resistance. Previous and prior resistance. So now we go back up. What was once our resistance becomes our support. We go make our new what? Highest high. Same thing. Follows it beautifully. Once it goes to, once it hits that resistance to make that higher high, falls back to the what? Previous higher high point, and now that point's its support. So it's continually making its way up. That was a true uptrend, and it was a very beautiful example of support and resistance, and I wanted to give you guys that so that you really do have some sort of what would you say? For you to see, a lot of people want to see how I draw mine, so that's how I draw mine. I don't have, thousands of lines. That was on a 1 hour chart. So, when I'm trading a 1 hour chart, I'm using usually the 4 hour, the 1 hour, and then the 30 for entries. I'm going to get into that. So I'm moving through. This is probably the longest that I was going to sit and explain something. But this was what I wanted to be explained because this is probably going to be the biggest piece for you to really flipping the accounts has to do with, like I said, the skill set first. So I wanted to help you guys refine. I didn't want to get on here and tell you, hey, I didn't want to give you all the logistics, like here's the lot size to start with and have a nice night. Like, I really want to go through the skills with you, and then I'm going to get to the sweet part, which is where's our perfect entry at, and, what lot sizes should we take, and how many entries should we take, and things like that. So we're getting there. And I hope that it's been pretty good so far with, even, like I said, if you've been trading and you're just trying to brush up, or if you really, really are needing to learn the skills, don't short yourself. Don't worry about, do it on demo as many times as possible before you even want to, try it with a live account. So past our structure, and I hope that made really, really good sense for you. Now I'm going to roll through and I'm going to go back to my little my little squigglies, because those ones are coming through for us, sister. So I have trend lines. That's the next one. So trend lines, trend lines are, what I want you to know is that they are not quintessential. They don't need to be there 24/7. They're not something that you're going to be able to use all the time. That's just a given. That's just not, realistic. They don't work all the time. So I'm sure if you've been trading, you've seen price, take steep drops or heavy rises. And one thing that you want to know is that everything that you do in trading, you're stacking probabilities. So, for instance, when I have a true trend and I have structure aligning for me and I have support and resistance lining up perfectly, trend lines are just diagonal support and resistance. So when you're drawing trend lines, the whole goal is to allow them to move at that 45-degree type angle. So if you're forcing a trend line, like I've seen some people's lines, and what's funny is, people be trying to grab the market like that. They'll put a line there just to say, like, yo, I have a trend line. And it's like, no, use it if it works and then forget it if it doesn't. So your trend line needs to be clear. You should be able to align with your horizontal support and resistance. You guys see how that shoots through like an arrow? That's how your trend lines need to be connecting. If you cannot connect with the market like that, and even if you wanted to see it live, let's see if I can get something going here. See how, for instance, this in here would be an idealish type trend line, because even though I'm cutting through a little bit of body, that candlestick just fell lower. So at one point it wicked it. What you can kind of see is that I'm at a 45-degree angle. My line is not forcing like that. It's there. So price just came through and bounced. And if you want to see structure implemented within that, look at structure. Then we just create a what? A high. Here was your what? Higher low, higher high. Where is your higher low at? Higher low is right on top of your previous high, right? So it's all about structurally seeing the market move like that. When you know support and resistance, for those who are like, oh, support and resistance doesn't work, like, what are you looking at? You're looking at the market making the same exact movements, and it just moves in similar movements, but not always the same. So that's what you have to know. Have to have an eye for similarity versus exactly the same. It will never be the same. If it was just the same, it'd be no fun. We'd all make millions of dollars. Like that would really be like, that would be something that you wouldn't have to learn at all and wouldn't have to grow in. So, I get better at seeing the market as I go. It just doesn't come perfect or naturally. Certain things take more time, and so the practice has to be there. Go find live charts and do exactly what I just did. Find the structure. So if your two supports right now are lining up, see how everything is clicking now? So I have a little painting going. I'm getting a little bit going, because now I'm like, okay, cool. I got an uptrend, right? So I have an uptrend. It's making higher highs and higher lows. What else do I have? I have support and resistance playing beautifully. So my structure is matching up with the way that it should. What do I have too? I can connect the trend line. So my trend line lines up with my support and resistance really, really well, right? Both of them are playing as support. So I have support diagonally. I've got support horizontally. Boom. So now you guys can kind of see. So I wanted to give you a little bit of a live viewing of that, because I know sometimes if you see someone screenshot and you're like, oh, she didn't draw it, or she didn't do it on the live chart. So I wanted to show you live so that you can kind of say, okay, cool, that does make sense. I see it. Same thing for over here, though. So now going back to my squigglies, now it makes sense for if I drew them from below over here. See how structurally it's playing? Support, support. Both of them are diagonal supports. So one's horizontal, one's diagonal. So your trend lines, like I said, the pressure shouldn't be there for them to match up and be perfect. That will never be the case. You're never going to have a perfect support lines, perfect resistance lines, etc. So really just work on refining those things and see if it clicks. So right now, I would have had 3 probabilities stacking for this trade over here. If I would have been working on this earlier and actually was going to trade it, I just didn't trade today, but that would have been beautiful because I would have watched price pull back throughout the whole day. Price would have fallen back to a support. I would have been able to connect a trend line there because I would have had it from earlier. And boom, 45-degree angle. I would have been then looking for an entry. And I forgot to mark off, I guess my etc. was what I forgot to mark off. The last things I'm going to cover before we start to get to number 2, which would be timing. This is the last thing. Indecision candlesticks. So like I said, anyone who's coaching me privately, you're probably like, this is all review, she's going over the same thing. Basically, indecision versus decision. These are the biggest pieces with your entries. So you want to get a perfect entry, learn indecision versus decision. Indecision candlesticks get thrown all the time in the market. So when you get an indecision candlestick, those are what most of you guys might refer to as reversal candlesticks. So you might see a what? A hammer. You might see a doji. You might see a hanging man. You might see a harami, you might see a shooting star, you might see an inverted hammer, you might see, whatever reversal candlesticks you identify with, you might see one of those. And those would be what you're waiting for. They're like your holy grail candlestick to get into the trade. The biggest piece is that they have to be after what we just went over. So if you're seeing a reversal candlestick or an indecision candlestick, this is where a lot of you guys are losing at. You're looking for just that one thing. So your mind is not connecting all of the dots, you're connecting one dot. So you're like, because that's the thing, probabilities must be stacked. If you're not stacking them, you are going to have a hard time, like I said, being profitable. You're going to have luck trades, basically, because probability wins. How probable is it to happen? If it is not as probable as what you can really, like I said, start to build your clue list, then it's probably not there. And so building out your clue list and marking those things off, check by check by check by check, is what's going to get you those consistent trades that are worth entering. So, for instance, I've marked off 3 things already. I got a true trend. I got support and resistance aligning. I got my trend line aligning. Boom. What am I waiting for me to take an entry? Have to look for some pullback, and I have to wait for price to pull all the way back to my support or all the way back to my resistance. The further you let price pull back, the better the shoot forward will be. So a lot of people try to rush that pullback. They want to get in immediately. So as soon as they think they see an indecision candlestick, the fact that they have to wait for that support or that resistance becomes totally like they're blindsided by just seeing the reversal candlestick. So what you have to do is literally start to practice connecting all the dots. What do I need to take place first? Price has to pull back to my support or pull back to my resistance before I ever look for an entry. So the reversal candlesticks become your entry points. When you see those take place, that is when you kind of have the go to take an entry. Now, what I want to cover is that candlesticks, some people are just going to have different styles. Me personally, when I started to really mature my trading and trust my skill set and trust my analysis, what did I know is that when price has already pulled back, like let's just say structurally, and it throws me a wick like over here, I'd take an entry. I don't care how low it looks like it's going. Structurally, it's following exactly what it needs to. So even if it pulled back a tiny bit more, I'm not going to be hurt. So the biggest key is like, a lot of people ask the question of, do you wait for one candlestick to close before you take a trade? Here's the steps. So if you're on an hour chart and you're looking, and this is what we see some on the 45-minute, but it really probably looks exactly the same on an hour. If you were on that hour chart, you just start going back time frames to see if you've seen any indecision. So that's the bigger step. Once you notice that you're ready to take an entry, start going back on your time frames. That's what a lot of people aren't doing. So you may miss out on having that really great entry from down here because you're only watching and waiting for price to close up here. But in between, prices closed here, 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 here on those smaller time frames. So if you go back and check those smaller time frames, your entries are going to be bomb. So I say, like I use TradingView, so I have access to look at it from 30-minute, 15-minute, 45-minute, 2-hour, all those different things. Go to the 45 to the 30, whichever time frame works, even the 15 if you want to see. So you should be able to see price slowing down on the pullback for any trend that it's in on those lower time frames. Some of you guys are not checking that, and that's what's kind of throwing off your entries too. So entries are going to be everything. As I start to move to step two, entries are going to be everything because everything has to do with kind of, as we move into that, timing. So pretty much just wrapping up, like I said, number one, true trends, structure, support and resistance, trend lines, indecision, candlesticks, and reversal. Those are kind of your ideal trade checklist. You want to be able to check those things off before you're ever taking a trade. If you are a trader who trades with indicators, anything else, like much respect to you. If you use Fibonacci, if you use any other skill set, if you use a moving average, if you use RSI, those things, like I said, nothing wrong with them. Probability stacking. You want to do that. So if you need as many confirmations as possible, go for it because that's what's going to make you more comfortable. So you can't hurt. You won't be hurting if you have as many of those yeses as possible. So just like I said, take whatever applies to you and then, fit it in with your style because that's what it's about. It's about growing. So number two, moving on, is your timing. So timing is everything with now getting into actually flipping the accounts. Timing has to do with your trades. So for one, when you're trading a small account, you're starting with a little bit of money. So for me, I started with $100. And let me just tell you guys that I actually blew that like 3 times the first time I tried it because I was impatient. So I started with like $1 lot size. I was like, ooh, go for it, $1. And, I blew the account like 1 minute because I was just like, immediately once I entered the trade, it pulled back and then boom, my trade was like, it was abolished. It was done. And so basically the biggest piece is that your timing has to be effective. And what I mean by that is that you want to know that the market is about to move pretty much immediately in your direction. That is why I went over what it really takes to take a great entry. Your timing has to do with that. So if you are getting on the computer and you're about to take an entry, if you want to see your account flip pretty quick, you want to make sure that price is moving pretty much immediately in your direction. That's the goal. Because if not, then what you're going to do is get caught in pullback. And obviously, if you have a small account, no matter what your lot size is, things are going to start to dwindle. So you do not want to be super behind in your pip count as soon as you take an entry. That's the worst feeling ever, is that you enter and then price pulls back 200 pips, right? Nobody wants to wait for that because, even if it's going to reverse, like still, it's heart wrenching. So you're like, no, like I want to get in and I want to literally pretty much execute. And that's the goal. When you have bigger amounts of money and bigger accounts, I don't care if my trades go 500 in the 500 pips in the negative sometimes because I know it's going to shoot up. My entry might have been crap, and I'm like, okay, it's going to go there. I can hold it for 3 hours, and I'll be, in the positive. Whereas with this, you don't have that. You don't have that, leniency at all. So that's why your entries with number one play a huge role. You want to have that down so your timing becomes very, very meaningful in that way because like I said, it's not people are asking me, they're like, so how many trades does it take you to flip it? And the thing is that when I first start off, kind of moving into number three, risk management. So now that you know that you're supposed to take an entry from, somewhere in here, that's ideal. Because guess what? Price started shooting immediately up that next, if that was 45 minutes, between the next hour or 2 hours, you want your price to be moving up. So you want it pretty much immediately going in your direction or immediately, downward in your direction if it's a downtrend. So timing is number two, I guess. Number three, risk management. How much should you be risking? So giving the example from the $100 to 1,000, 0.25 lot sizes have been my holy grail to an extent because they've been like the easiest to, if I did make a mistake on an entry, am I going to blow my account with it moving 100 pips? No, it's only I'm only $25 in the negative, so no worries, right? And it's the same thing for, like I said, even if you wanted to go lower, no problem. So your first trades are your biggest trades because even though you may not profit a ton from them, you're going to build your account and you're going to be in a better position because guess what? Even if it went in the negative on that first trade, 400 pips is what will blow your account technically. So that's the biggest piece, is that if you went 300 pips in the negative, your account's not going to be blown. You're in the game. So your risk management is everything when you do this. Most of you guys are trying to build small accounts from, small amounts of money to big because, maybe things are tighter. Maybe you just don't want to put that much money in an account. Or maybe You just want to see and test your skill set. So, whatever your reason is behind wanting to take the little amounts and make them large, what I want you to know is that if you do not have the risk management to start off, you will hurt yourself. So unless you have, now here's the key though, risk management comes into play unless you have a huge trade that is like I'm telling you, like it's popping off, you see it, yo, take as many entries as possible, like at the times that the market is moving. And this is how I build them. So you guys have seen on my Facebook where, like, for instance, I might have had the account and it set my balance at $100, and then I had 7 trades going or 5 trades going, and maybe I made 500 or 600 off the trade. So I had a high leverage account. I use like FX Glory if I'm going to do that usually, and I can trade, high lot sizes. So I just put tons of lots. Once I knew that, like I knew the market timing was moving and I knew that my trade was about to shoot, go for it. Because guess what? That's where that timing comes into play. So if the market's moving slower and it's kind of not moving in your direction yet, you want to play it safe. That 0.25 is kind of there for you to just help you get off the ground. You might close out with a $25 trade. You might close out if it moves through the nighttime, let's just say, and it moves 150, if it, let's just say you made 150 off the trade by that 0.25. So, it's moving, 500, 600 pips throughout the evening or throughout the time that you're sleeping. And then when you wake up, you got a $250 account now. So now you have more to risk, more to you have more leniency. So like I said, I would encourage most people, since I've done this a lot, I would encourage you to start with that mindset. 0.25, let's build these trades. Let's take consistent trades that, they move a lot of pips. And if you're trading and price is following its true direction, let's see how many pips price is moving right now. So if we kind of follow this, I'm using this example, so I think it's kind of cool that it's really following that. So it created a higher low, right? So price needs to go make a what? Higher high. Structurally, that's what it's supposed to do. So if it was going to do that, it would break through where? Here-ish, right? So right now, though, from where price is currently at, when it pulled back, if we had gotten an entry somewhere in here, let's just cop it off and say the 300s. So from the 300 all the way up to right now, price just the highest point that it got to was 632. So that's 332 pips right there. So if price goes up and creates its high, which it should go do, it needs to go make a higher high, it'll be somewhere near at least like the 715 area, right? So it's around 400 pips. So if you banked 100, if you took 5 good trades like that, guess what? $500. So if you were doing that 2 times, if you did that 2 times a day, or let's just say you did it 1 time, some of you guys may not be trying to go for a $1,000 flip. 500 might be what you hit. I think the first time that I did it, actually, it took me more so like a week and a half to actually hit the 1,000 mark, because I was kind of like trying to be careful like that. So I was like, if I keep taking great trades like this, guess what? Every time my risk gets a little bit bigger, I'm able to make a little bit more. I'm able to increase my lot size a little bit more. So maybe your first trade is 25, 0.25, which is you're making 25 cents a pip, right? So if it gained 400 pips, boom, you made $100. The next day you have $200 in your account. Let's say you wanted to bump it up and you have the same exact really great setup as always, and you asked me what leverage I'll leave, so I'm just going to answer that. Usually I think FX Glories is like 2,000, 3,000 or 2,000, I don't know. But I mean, the leverage, all you have to do is calculate that to how much you're depositing, So basically, what I will say is that if you do that, though, if you started off, so your first trade might have been that you made 100, but then the next trade, if you bumped up your lot size to a 50, then guess what? You're going to immediately double that. So if you made 300 pips, then guess what? You just made basically 150 or, whatever, if it breaks down to a little bit lower. So now you have a $350 account. Guess what? You keep doing that. So you increase that. And some of you guys may find entries on 2 charts. That's just how it goes sometimes. Some days I have trades where I have a trade here going and I got another trade going that's going to be a great setup a little bit later. So I have 2 trades that afford me the entries that I really want, because I know what? I can't risk and I can't afford to take crap entries. So I can't let my trading be sloppy. I have to have all of my number 1 skill set over here. Price action must be excellent. If that's not excellent, then 9 times out of 10, building my account is going to be pretty hard. So basically, But risk management is everything. You want to have those 0.25s to start, and I really encourage that. If you do it, sometimes you'll have two setups in a day. You might have three setups. Who knows? But follow the plan. Do not create an account and think you found the perfect setup and boom, bam, you're off to do a dollar lot size. And at the end of the day, what you're going to see is that if you're asking, for instance, let's just say for a stop loss, because that's what Ali is asking for, that's going to be up to you. I always leave that up to people because what I say is that when you're trading like this, you are trading to basically say, okay, if I lose this $100 or this little $50 that I'm depositing, I don't care if I lose it. So stop loss for me is like it's not there. They're not relevant for when you're trading like this because honestly, if it was, that's why my lot size is so small. I'm gonna leave the daggone trade until it goes up, basically. And that's just the way that I would say it for this specifically because trading like this is a game of risk. It's basically if you're trading to like, stop your loss by 1 pip, you're not going to make any money. You trade to make money. So when you really come to the, I guess, overall thought process of it, you're really saying, okay, my goal is to flip this account. That's what flipping is. It's fast and it's quick, but you want to do it as efficiently as possible. So a stop loss really isn't there because you don't want to stop yourself out the trade within 4 pips. You're just like I said, nobody's gonna really build their account like that. You give yourself leniency. So even if it moves 100 pips, let that trade sit. The whole goal is that if you've done the proper analysis, you should not need that stop loss. That is the bigger piece. So stop losses are there for I think longer term trades that or you're like I said, bigger trades where you're saying, okay, how much can I really afford to lose if I have a $10,000 account and I'm putting money in and I'm about to take these trades, that's when you're really looking to use stop losses. Otherwise, the best way to answer that is that for anybody who is looking, I'll just give you guys the tip. If you're trading bigger amounts of money, stop losses are always to the left. So you're always looking if you're on an uptrend, look at that previous high. You want to go down to a lower point there and say, okay, let's just say I want to give it till here, or I want to give it till somewhere in here. Let the market move though. A lot of you guys are like stopping yourselves out of the trades before they even can like breathe. So that's why you're having a harder time because what gets frustrating is, oh, I entered the trade and then it stopped me out and then it moved in my direction and now, I don't want to enter again because I'm scared. So all about basically like think about those things ahead of time. Is it really worth me putting a stop loss on this? No, not at all. So basically that would be my advice on that. So far, everybody just update me really quickly because I know I'm moving through quicker now because I want to start to cover everything, and then obviously I want to still have time for Q&A, and I'm gonna basically, we're gonna go to around 9. So basically, so far, everything very clear, everything good, as far as actually understanding your, let's just say, for number 1, number 2, and number 3, making pretty good sense so far. You guys got your lot sizes and what you would really need right now. Sarah says yes, yes. Oliver, you said what about time trading? Okay, so I need that to be a little bit more. I'm trying to think of like what you're trying to ask, or I'm trying to think. I'm trying to get in your head. Um, okay, so if you're saying time trading, I'm gonna answer. I think. Are you asking time frame specifically, like what time frame you should be looking on, hon? I'll wait for you to type that out. But basically, okay, so moving forward, moving along, confidence. This is where it comes in. Like I said, this is not a safe. Like there's no way to safely trade this. I'm being completely honest with y'all. There's no way to safely like flip like that. Like unless you are really the whole goal is if you are so scared to even like lose the money, what I would really suggest is that you just save up a ton of money and have a bigger account. But if your goal is to flip, the whole thing is that if you've done the proper analysis, you're paying attention to timing, you're handling your risk management, confidence has to be there. Anyone who private coaches with me, you guys know that I'm huge on it. For the longest, I was so timid like towards my trading, and I was timid. And what I want you guys to know is that like anything that shows up in your life shows up in your trading. And this is kind of me really saying to you, take care of your life. Like if you notice that you have a problem with really believing in yourself and anything that you're doing, you're gonna have a hard time doing it in trading because you're gonna second guess everything. So if you're someone who's like, I have this really great idea, but I just don't know. Or if you struggle with that a lot. Not that I don't care who you are, you can be the most confident person in the world and you still can have a moment where you're doubting kind of an idea that comes up or something. But in trading, the most confident people are the people who make the most money, period. Some may look at it as cocky. I don't care. I know people where I'm just like, like this kid is so good because he'll do his own analysis and he'll just be like, boom, 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 boom. All right, yep, about to take the trade. No mental, like, no time to even give his brain a second to doubt. And the reason why is because he's done the due diligence and he's done what he needs to, so he knows and he trusts. And the biggest thing is, if this goes against me, why did it go against me? That is something that, does come into play. When things happen and you lose trades, why are you not going back and looking at what happened and why you lost the trade? Most of the time, they're simple things. But what I want to say is that as you actually see yourself consistently wash, rinse, repeat, do something, you're more confident in your skill set. So if you're not practicing it and it's kind of half done for you all the time and you're like, kind of know support and resistance, kind of know trends, kind of know, and I take good entries sometimes and I practice trading every now and then and I've blown a couple accounts, but, I'm just like, just kind of bouncing around. I'm not really practicing, but I expect to be a six-figure trader. It doesn't work. Your confidence grows, and that's when your money comes, because when your confidence is there, you're a professional. That's how they show up. You look at professional athletes, professional dancers. Do they know that they have the ability to be wrong about something, or to make a mistake on a pirouette that they're doing, or a shot that they're going to take, or a pass they're going to make, or whatever the case is? They know that they're not perfect, but they have that confidence in their skill set because they've done it off the court repeatedly. They've done it in the dance studio repeatedly. They've sang the note repeatedly. So even if you always have that 1% chance that what? I could be totally wrong about this. Like, that's in everyone's mind, but if you do not have the confidence to kind of like do your analysis and then boom and take it, when you have that opportunity, building small accounts isn't for you. Like I said, you can be a safe trader, a very, very, very safe trader who creates, bigger accounts, and then you sit on kind of the smaller lot sizes, and then you have thousands of pips where you could go, and your entries don't really have to be that perfect, and you can just kind of skate through and profit after holding your trades for 2 days or whatever the case is. That is a trading style that sometimes just works for people, because if you do not have the diligence and the patience to really build that skill set to become confident, it's not for you. If you are wanting to, confidence will be everything. Take your dang on trade. That is the biggest piece. I've watched people hold the trade for like, you're sitting there with your hand on the button trying to take it. No, when price has pulled down to that point and everything's aligning with everything up here, take it. Has to be there. So if you're not feeling confident right now, ask yourself why you aren't confident. That's one big thing that I want to help you guys with. You want to know why you're not confident. So you said, hold on one second. I'm kind of like, now I'm looking through questions. Oh, okay, good question, Oliver. Definitely. So if you see, for instance, 3 a.m. to 10 p.m. or whatever the case is, if you're asking like what time should you be looking to trade? So what do you know about the market? Some of you guys are international, some of you are like New York, some of you are Cali, etc. What you're going to see is that the different time frames are, they're flexible for whatever. So London session is going to be different in a different time zone for someone else versus the New York time zone. But if we're just talking regular time frames, for me, since I'm on EST, the market moves beautifully in the mornings around like between 6 a.m. to about 12 in the afternoon. I don't really touch the market after that until maybe a little bit later in the evening. But the biggest piece, and even if I look at in the evening and it's not doing much during Asian session, it might be on a pullback. So like kind of how this panned out over here, this was during Asian session. It pulled back all throughout the afternoon slightly, and then created that beautiful, rise. So it's all about your time frame. So I would start to suggest that you look at your time frames. Even if you're not trading, pay attention to what parts of your time zone in your day the market is moving. See when it's most probable to move. So throughout any afternoon, it's probably not moving much. You're not going to see some big movement. You might just be paying attention and waiting for structure to align and price to pull back to those points. And then, Mr. Terrence, you said, can you give an example of 1K to 10K scenario as far as starting lot size and when to increase? That's like basically where you would have the leniency to start with about $1 lot size. So your first trade would probably be like $1. And then you're just moving up like that. So, the whole thing is that, like I said, I get really risky when I know I'm about to have a big like blast. Like I'll put a darn 4.00 lot size if it's I know it's about to shoot because then and it's moving directly in that direction. So you really don't have much leniency when you do stuff like that. But those have been some of my trades where I've done it in like 20 minutes and gotten, my account to whatever I was trying to get it to. So basically, there's really no, without doing tons of math, there's really no way to really say, hey, this is the exact lot size that you have to put. Follow kind of the same. So just go up and, rounding it up. If it was 0.25 for 100, what do you think you're going to use for 1,000? You're going to use about a 1.00 to start with that. So you need what? If you win 100 pips, you need 1,000 pips to blow that account. So that's just basically what I would say. It's like think about it in that way. Moving to my last piece, because then I will basically walk through some examples of entry scenarios with you guys for just what would be perfect entry. And then I'm going to open up for Q&A, and I'm going to let you guys actually, do it through voice. But basically the patience element. Patience has to be there with your confidence. So two things go in hand. You have confidence. It's kind of like the balancing scale. Confidence is there, but patience has to be there as well. Patience is not there, you will not make money. I don't care how much money you have in your account. I've watched people start with $10,000 accounts and they think they're about to make it 100,000 and they blow the whole account. So that goes with what? It doesn't matter how much money you have, the market can take that away. The biggest piece is if you get too greedy and you think you got it too fast and you think, gotta remember, I've done this like 40 times before, like I said, it was like repeatedly practicing and practicing and practicing and figuring out and refining. So I'm giving you the blueprint. You got to go practice it because I'm not there clicking the button for you. I don't know exactly when you're going to say, I think this is a great entry. I should take it. So these are the things that you should be refining consistently. But the patience has to be there. Some of you guys just don't have any patience. I watched it over and over, and I watched it in myself. That's why I know. If your patience isn't there and you think that you need to be, hitting the 1,000 the first time you try it, you're going to struggle. You have to maintain that balance. So when you get on your computer to do this the first time, whether you are doing it in a demo account, whether you're doing it in a live account, got to follow the steps. 1, 2, 3, 4, 5. So then the patience, when you get to that, you're like, oh, I was patient because I waited for everything to align, right? So basically, patience has to be the number one thing. Remind yourself that whether it took you 2 weeks to do it, or whether it took you a week to do it, whether it took you a month to do it, you're getting 1,000, basically. I mean, you're getting 1,000% return on your investment, basically, or 900%, because at the end of the day, that first 100 was your investment. So really, when you look at it like that, if you can keep doing that, you're going to be in a really good spot. So what I want you guys to remember is that if you have number one, pointing back to number one, if you have that, that's going to be your main baby. The strategy comes with, like I said, being able to have all these skills, thinking about your timing. So I'm going to reiterate again. Timing is what? Kind of how we went through. I know that I'm not looking to buy in right up here because what? I haven't pulled all the way back. So my timing says what? When the market starts to, if I wait for this to pull back, it's going to pull back and it's going to be there at some point. I got to pay attention. Then I know what? That I still want to make sure that I keep myself in the game. So even if I know it's about to shoot up, maybe this first time that I'm building my account, I need to go ahead and use a 0.25. Or if I have $1,000 in there, I need to go ahead and use a dollar lot size. I don't need to use an 8 or a 5 because I want to do it fast. I'm going to do it. So what would that look like for you? If you could do that, if that extra $1,000 was there, what's really gonna hurt you to build that first time and do it correctly, or build it 4 times and do it the same way like that with the 0.25 and keep increasing as you go, as your account builds and you have more of the risk. That's going to be the best bet for a lot of people, because if you do it, it's going to be like, okay, cool. Oh, it says no sound. Sounds bad here too. Oh, okay. I just wanted to make sure. I'm like, hold up, I'm talking. Okay. So basically, I really would say that that's going to be the last piece that I really cover, as far as, like I said, going through, then with the confidence, taking the trade when you see the setups, because if you've done the correct analysis, you're gonna have the confidence. So patience comes after you've done all those different things. And so basically what I want to do is just walk through a couple ideal trade setups with you guys. I think that that's really, so we went through one because it was here live and it was beautiful. That would have been a really ideal setup. It would have been gorgeous to take, and you would have, like I said, if you want to say 30 pips, 300 pips, it moved. And from that point, you're able to capture pretty much a really good rise in your account because that's the whole goal. You stop sweating the more that you go. So as you have once you get to like that 500 point in your account, you're like, cool, my next trade setup. The whole thing is that you want it to be wash, rinse, repeat. So you don't want to have one good trade and then have a loss, right? Or have one good trade and then have a sweat. Keep going back through. Am I taking the ideal trade? Ideal, 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 ideal must be the number one thing that you keep in your head. Because if you don't and you start to get sloppy, what's going to happen is that that little $100 account, you might have grown it to 500, then you're going to get stuck between like 300 and 500. So you might lose a trade. You don't want to do that. You literally want to kind of challenge yourself to almost have a perfect streak in a way. That's how I've done it. So I noticed that when I was building, my trades had to be super meticulous, so meticulous. So let's go over again meticulous setups. I think that that's the biggest piece that a lot of you guys may struggle with. So let's roll through that, and then I'm going to open up for Q&A to show some things live and go through anything that you guys need. But I feel like I've covered, kind of like I said, the essentials of what you really need, and anything that comes to mind as I go through with questions. And you guys will have the option to ask me that. So let me pull up some other charts real quick. And I really have not traded, so I have no idea what's been going on in the market at all. Let's see, maybe some, you know what, for time's sake, actually, or does anyone have a chart that they've been looking at? That's what I'm going to allow. See, any charts that you guys want me to pull up to try and see if we have any ideal setups? Euro, of course, no one's going to ask for Euro. Euro USD, let's go there. Oops, looks like I was teaching on this chart. Oh, that works out perfectly. We can leave that though. Or no, I guess not. Excuse all the squigglies and wigglies on this one too. But I have support and resistance set up and it looks like it's following it beautifully, and I haven't touched this in forever. Like I said, structure leaves you clues. So I already can start to clue find as I'm going through and deleting this stuff, guys. For one, Euro is uptrending. So it is moving upward. We can see it clearly, and I'm not even zoomed in. I'm about to zoom in a sec once I finish deleting. So Euro's uptrending right now. It looks like it just pulled back to a previous support that was once a resistance. And basically, what I'm seeing is that we might have a very ideal setup. And it's funny because what? It's 807-ish, right? So price has been pulling back all day. It's had the opportunity to kind of move through. And let's see, why is it doing this to me? There we go. So can you guys see that? How structurally it's followed? It came back. So look, in the past, this is played as what? Support, 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 right? On that uptrend over there. So structurally, I'm in a beautiful place. This is like very ideal. And I haven't even touched it. This is why if you are trading well and your support and resistance and structure is good, you will be able to use the same exact support and resistance that you didn't have for, weeks. So look at it. Price hit a resistance point, pulled back to a what? Previous resistance as a support. Boom. Notice that can I implement a trend line? So I'm checking off my checklist mentally as I'm going through right now, right? So guess what I have? I've got trend, because I'm in an uptrend, higher highs, higher lows. I've got support and resistance aligning perfectly. Can I get a trend line? Yes, I can. So here's the thing. I want you guys to pay attention to this. See how what I said? Technically, this isn't the perfect trend line because it's not aligning with it over here. So if I wanted to try and like force the line, I could go like this and I could pull it through. But is that worth it? No, not at all. So can I know that this is in the same area though? Yeah, look how, really they both meet. So at that 45-degree angle, price was a support in here, support down here, and it's playing as a support. Price candlesticks just haven't touched it. But aren't candlesticks touching my other support where these lines intersect? Yes. So that's what you kind of want to start to check off. Does that really work out perfectly? No. But could that be kind of another confirmation for me in a way? Yeah. So what do I want to look at now? Price has already been pulling back. I jumped down to my 30-minute chart. My 30-minute looks really good. So what do I know though about this time period that we are at right now? It's 8:09. I don't believe that price is fully done pulling back right now because it's Asian session. I just don't. What I would say is that around maybe 10 o'clock, price will be done fully pulling back. I feel like it's playing around and fiddling right now. But I would probably just take an entry on a first trade. Let's say we were building an account. If it was just a first 0.25 type trade, I would take the entry and buy. And what I would do is set a take profit for somewhere up in here because that's going to be the next place that price resists at, right? Because structurally, doesn't price have to go make a what? Higher high. So don't I want to go find at where's the last place that price is stopped at? If we look back in the past, pull my line down, resistance, support, resistance, old resistance. So it has to go make a new high. Here was our last structural highs where we closed out at. So if we go make new higher highs, we'd have broken through that resistance point. Price should pull back and make this what? A support somewhere. So basically, that's a very ideal setup. And what time frame do you draw support? I'm drawing my support and resistance on any time frame that I'm on. So if you see me trading from an hour chart, support and resistance comes from that chart. If you see me on a 30-minute chart, then the support and resistance is just staying. It's just moving over to the 30-minute. So whatever time frame that you're trading on, that should be where your support and resistance is at because you want to be as close to price action as possible, right? So you're right on top of it. But basically what you're going to see is, like I said, so I'm drawing in here to check, where's my next place that I could get stopped out at? Now I'm calculating. So if I bought in right now, what's my goal here? I want to make at least $100 off of this, right? Would I do that? For sure. I'm at about, what was that? 95. So if it gained, what'd you say, 40 pips or so, 400 pips, whatever you guys want, micro pips, whatever you want to call it, then that's what you're going to get. I would make roughly 90 to $100 off of that entry. If it rose up to there, instead of take profit. Price is not going to move as much as I would want it to right now because it's not Euro session. It is Asian session. So keeping those things in mind. So I wouldn't keep checking my trade. I just set to take profit because it's not going to move to where I want it to, within an hour or 2 hours. Now, when price is, the ideal time is definitely the hour to 4 hour type charts because those are the charts that are going to get you the most pip movement. So scalping is not what you want to do because scalping it's risky and it's going to, hurt your brain. So you want to be on a higher time frame with the best movements. Same thing. It's the same type of trading that you do for long-term trading. It's just that you have a smaller account, so you have to be more meticulous. So ideally, the hour to the 4 hour is your best bet. But need big lots for exactly. Yep. So that's exactly why, because you need big lots for scalping, guys. And if you're not familiar with that, scalping is when you are like trading really short time frames. And so the whole point of scalping is to have a big account and to be able to throw a 5.00 and gain 10 pips and move out. So that's why you do not do that when you have a small account because you can also lose that amount very quickly. So higher time frames. So basically what you guys can see is that you are pretty much with a really ideal setup over here. So boom, we found another one. As DJ Khaled says, another one. EuroCAD. I'm not going to be able to make it through all of the charts that you guys are asking about, but I'm going to try to go through as many. Would I say that EuroCAD is reversing? Let me check my 4 hour real quick. So from looking at this chart, so Gareth just asked a good question. He said, would I say that EuroCAD is reversing? Honestly, and you might want to check daily too. I wouldn't say that it's reversing totally yet. Look, it just made a new structural high. So technically, it went and made a high. Now look, is it reversing for maybe currently, like to come back down probably? Yeah, because it needs some pullback. So it's been shooting up for a while. So if that's what you're kind of asking, then yes, because it needs to pull back. But what you're going to see is that it just made that new high. So it broke past, this was an area of resistance for it, and it broke past it. So once it gets past that area, now it's shooting, right? So it's going to pull back some probably to make a what? Higher low, because that's what it needs to do. But really, it has up until here to go because it can revisit that old place for sure. So remember, kind of like once you visited old new places before and you make a high there, it's kind of like they want to go shoot back up for that same place. So for instance, let's just say if you're a runner, like, and you run 10 miles one day, you push yourself to go do it. Guess what? If you worked your way and you've been training for that, you do not try to go back the next day and run 3 miles, or the next time that you're training again, you're trying to get better. So even if you took a break, your whole goal is to go higher that next time. That's the same thing for price, or even lower. It's the same thing for price. So price is always trying to go back up and revisit. So you always want to think about that. So basically, if you're really thinking about that, then what you want to see is that it's probably going to pull back some, and then, so right now it has been pulling back. So it looks like it wants to pull back, and once it's finished pulling back, it's probably going to shoot again. So no, I don't think that it's reversing. I think that it's still in an uptrend because it's still currently following what? Higher highs and higher lows. It has the possibility of reversing after it gets up to that new high, maybe. So then it probably will consolidate and then begin to make its way back down, or it could go make a totally whole new high past that one that we looked at on the daily. So I hope that made sense to you guys. But I gotta stay on track here. So I'm gonna give one more example of pretty good entry. So this would be a great entry over here. Like I said, price has been pulling back. Same thing. You want to kind of start to implement structurally. So if price wanted to pull back a tiny bit more, that'd be nice because it doesn't feel like it's pulled back the way that it should. I'd be expecting it to come back here, maybe even back down here. And this is the 1 hour. So we'll see what it does. But those will be the points that I would at least aim for somewhere in here. But technically, look at it. It's on an uptrend. So even if it didn't, what you want to know is what? It's making higher highs and higher lows. Oops. That's going to save the drawing. So ideal setup would be what? Pulling back a little bit so that I can get a little bit more support. That's what I would be wanting. A little bit more support, a little bit lower, and then taking my entry somewhere in here. And then after, a reversal candlestick or something, and then expecting price to go make a higher high. And so, like I said, keeping the same mindset of what? Patience. 0.25 lot size, great timing, great entry, boom. So the next question that I'm going to go over really quickly, and what I'm going to do now is actually open up for questions because I think I said my piece and really explained a lot of what needs to be done, etc. So I want to know what's kind of coming to you guys' heads, what's clicking, what's not clicking, and we can start to work on that so that everything does make sense. So I'm opening up for questions because you guys have been fantastic listeners and fantastic you got really great questions already. So I want to know if there's any other things. So let's see. I'm starting off. Well, let me just go with Ali's first. How many charts to monitor? How many charts do you monitor daily for setups? I don't monitor tons of charts daily. On Mondays, I go through pretty much all of the charts and do probability on them. So I figure out what I think is most probable to happen, and then I look at the charts that are the ripest, and so if they started to trend, I'm like, okay, yeah. Like Euro USD, for instance, that looks like a beautiful chart right now. I don't even like Euro, but I would trade it because it's in such a, pretty flow kind of. So I could expect that to stay an uptrend and remain one for a second, and just follow my support and resistance and structure as it moves its way through. Is there any direct way to pinpoint a reversal? There's no direct way because you don't know when the market has finally decided that it wants to reverse. What you do know is that you have major resistance points and then minor resistance points or major support points and minor support points. And so, for instance, what I would do is look over here, kind of. So what we can kind of see is if we just use this chart as an example, see how in here was a pretty normal support, right? Support, right? Close to planar resistance area. So that's a pretty major place. And then if we looked up here, this was a major resistance because what? It was a resistance on our 4 hour. So any spaces that you can find on your 4 hour to your 4 hour to your daily, those are points that are going to be major things to pay attention to. You want to know where are my major spots that reversal or consolidation could take place. So for instance, you see how price had a hard time getting past this major point, but then once it got past, it shot. That's because it was a major. So it resisted it multiple times, and then what you see is boom, finally breaks through. So it's all about basically knowing those major points versus the minor. So anything you can find on a 4 hour and a daily is considered a major. If you keep seeing confluence there and price is resisting, or it's touching in on a support multiple times, and every time it comes to that place it has a hard time and it slows down, that is a major point. Um, Zacchaeus, you asked me how many trades should I put into one pair? That's on you, hun. That is, like I said, that's like one thing that I can't really like. That's where you can't pinpoint. Strategies are kind of like you're telling what you can do with the strategy. So you could put a lot. If you thought that the trade was about to move, I've had trades where literally it was my first trade that I was taking on the $100 account. And if I just knew in my gut that it was about to shoot up, I would put like 1.00 lot sizes on it and let it shoot. And those have been my bigger trades. So that's really about, like I said, your comfort level. So maybe after you've done it a couple times, that was when I did start to get more comfortable, I would throw more. But when I was uncomfortable, I would just keep the same lot sizes and the same lot on it. So I wouldn't shoot for more until I was very, very comfortable and very, very confident. Oliver, you asked me what pair are you trading the most with USD CAD? Um, okay, that question, are you asking me, trying to make sure that I'm understanding correctly. So are you saying what pair do I trade most outside of USD CAD, like other charts that I like, or are you asking me? That's what I'm a little confused at. Is that what you're asking? Okay. Um, USD CAD is actually not a chart I really trade like that anymore. I used to trade it a lot. I love NZD charts now. So NZD CAD, that's the one that I was showing or taught the presentation from tonight. NZD CAD was amazing. NZD USD, Euro NZD, all of those charts are like pure gold. Like they're so beautiful. You can kind of see how they move. They just follow smooth trends. I think I was showing one of my clients this other day. They follow such a beautiful like continuation and reversal. It's like unreal. It's like heavenly. They just follow it so beautifully. So I love them because they really do have like a really like they're easy to follow, and like I said, they follow consistent patterns. So they have been my like I really like them. NZD, USD. I think I might have like support and resistance on this chart, so bear with me if I do. Oh, I spelled it wrong. I was like, what is going on? Oh, yeah, I have a lot going on in here. But see how it follows so smooth, guys? This is like old stuff that I had up. And it's still following. At a resistance point here after making a higher high. So if I wanted to just come and update my support and resistance, easy. Structurally, what am I looking at? Boom. So could I expect price to come in and revisit? Yes. Could fall back if it wanted to, make that higher low. Or right now it looks like it's already done that, and now it's making a higher high. So it could break through, retest this old resistance as what? Support. So they follow really smoothly. I like them a lot. And that's what I've kind of been stuck on. And then look at my trend lines. So really easy trends to follow. So those are the charts that I've been watching a lot. What signals the end of a trade? What signals the end of a trend, my bad. What signals the end of a trend? What we talked about. If it stops making, so if you're in an uptrend, if it stops making higher highs, so currently we've still made higher highs. So if it stopped going higher every time that buyers got the chance to go up, what does that show you? The trend is over. Or it's at least slowing down for that time being. So you want to be really, really thoughtful and watch that. So whenever I'm getting ready, like let's say I wanted to take a trade on this chart, I want to make sure that this goes and makes its higher high, which it already technically did, but it looks like it wants to shoot up a tiny bit higher. So it's going to shoot, and then I'm going to wait for it to pull back, and I'm taking entry. So it's all about basically if it didn't, let's go to the like example of if it did not make a higher high. If it didn't make a higher high and it made a lower high, then that's basically reversing. So let's just say that this broke down right here, and it went and made a same low, and then it made a lower high. That's the start to a downtrend. So you've now gone from making the higher highs to here's my last high. I've made a same low, and now I'm making a lower high, my trend's over. It would also break your support and resistance too, and it'd move the opposite way. So that's what I would really say. Um, when price breaks a zone or a trend line, do you need to wait for it to? Yes, for sure. Now, what you want to do is, like I said, be very like pay attention to similarity. So sometimes your candlesticks are gonna break the line that you drew because you're not the magic line magician. So you don't know like exactly where a candlestick is gonna go to. For instance, you see how price failed on the support right here, but my trend line support caught it. So boom, we worked together. So the candlesticks, I couldn't control that, but price broke through this support and fell to my next support, right? That's all that it's about, is using both. So one lined up, one other one didn't line up. You're always looking at who do I have working with me? What's working? What are my probabilities? Um, let's say. So when you said about trading trends, or when I said about you should only trade trends, trading a breakout is basically trading a trend because the breakout comes from price forming the start of a new trend. So that's kind of what we just talked about. Like if this was to form an M, basically that's what it would do. If it created a pillar here, lower high, whatever, then it would have to go break this neckline or this low to start the downtrend. So breakout trading is same thing. You're still trading a trend. So when I say that you don't want to trade not a trend, I'm saying don't counter trend trade. Don't trade against the current trend that's going on. I see people do that like all the time. And then they're having a harder time because you can't really count on pullback. Pullback doesn't give you, it's like a mixed signal type scenario because they're not really in true power. They're kind of in survival mode a little bit. So sellers are in survival mode when they're uptrending. See how price is shooting right now? So shooting up. Um, okay, so what time or sessions do the NZD pairs become volatile? Honestly, I don't really know. And that's just to be honest. I'm sure they move a lot during Euro session because that's what, that's their European is their time frame. But it depends because some are dealing with CAD, some are dealing with, so if it's Euro NZD, then obviously that's really probably moving during London session. If it's NZD USD, it's moving during London session. So, all of these charts move on the same time frames as pretty much each other. So what you have to do is be able to go find them. So like right now, if you're watching your chart, if you checked it throughout the day, I would have known that it was pulling back because it had gone and made a high. So if throughout the whole day it was pulling down and then it decided to, I waited for it to pull back, it's kind of like paying attention to that chart if you plan on trading it. So, you just kind of got to use your, what would you say? Like it's like a common sense thing. If you know that it's not New York session, or if you know you're looking at an Asian pair and you're expecting it to move during London session, probably that's a negative. It's probably not going to do that. So it's about kind of like going through and saying, okay, I know what type of pair this is. This is a European pair. Boom, it's paired with a US pair. So basically like that. That's what I would say. Do I look at the news before I trade? You're welcome, Candace. Do I look at the news before I trade? Yes, always. So if you guys are connected with, I'm losing my train of thought here. I need some water because I'm losing my voice. If you're looking to trade and you want to look at news, you definitely want to look at probably like Forex Factory. That would be the biggest piece. And Camis, no, I don't trade London session. I only trade in the mornings really. Between like I meditate, I work out, I do like everything before I ever touch my computer, and I probably get to my computer by like 9 something. So no, I do not trade London session. I'd be asleep, girl, by like 10 o'clock. Um, but what I was gonna say is I want to answer. Yeah, Forex Factory. Forex Factory will be the news. So if you go there, it tells you the exact news for the pairs that will be traded. We'll be having news or different events coming out, and they have the folders where it's like, medium impact, high impact, or low impact. So you just want to go check that, and you'll know for your base or your quote currency, what's going on. And then let me see what's going on. So I have my next question here. You guys are full of questions, and I love it. So feel free, feel free to ignore for now. Oh, no, you're fine. But I was able to log on until a couple minutes ago. Oh, well, that's a good one. You're going to get the recording. Any meeting takes, I think, like 24 hours to actually update the uh, like, it has to upload the recording and everything. And then once it's done, I'm pretty sure it gets sent out to everyone who registered. And if not, I will personally send the link. So, as soon as it's uploaded, you guys will get it sent to you so that you have access to it for sure. And I'm sorry that you missed some of it, hun. No, you don't need to trade every session, not at all, because you don't have to worry about every session. Every session is not, you want to be a trader that, like I said, it fits your life. So you really want to look at what ideal hours will work for me. 3 a.m. is not about to work for me. 6 a.m. is not about to work for me. So realistically, 9 to like 12, that's the middle to endish of New York session. That's when it's popping for me. So no, you definitely don't need to trade every session, and don't buy into like the hype of online. Like I said, even with me, guys, like I know that you guys are looking for, advice from a coach, and you want someone to really say like, hey, but the whole thing is you really have to kind of learn to take initiative in your trading and really say, okay, I know that this would work perfectly for my schedule and my rhythm. How do I get there? So you take what you're learning from each coach, and you kind of start to mix and match those things. That's why I say if you trade with indicators, don't try to like totally go price action overnight, because what? You're used to one thing. So it's about adjusting. You adjust as you begin to trust what works and what doesn't. And that's the big thing, is that as you get better and better, you trust it more. So your adjusting becomes easier and easier. So yeah, you definitely don't want to do that. Let me go ahead and answer, when is it too late to enter a trade? If it's, so for instance, like with common sense kind of. So for instance, like if you're using your support and resistance, it's too late to enter a trade if you're up here, right? So same thing for over here. Support and resistance tells you it's too late to enter your trade if you're over here. Support and resistance tells you it's too late to enter your trade if you're over here. Because you're risking, remember that resistance and support are there as stop signs. So two things can happen off of them. You can either reverse or you can break through. Now we're trusting that when we're trending, we're going to break through, right? Like that's your thought process towards it. I'm going to break through, I'm going to go make a higher high. But what you don't know is that you don't know that it's going to break through. So you're always going off of, okay, where's my best entry point? Especially when you're trading with these little amounts of money. So you don't want to be high up and then it starts to pull back on you. So make sure that you are getting those entry spaces. So it's only too late unless you are, like I said, really close to a resistance or a support point if you're on a downtrend. So don't trade so close. Always give yourself room for a great entry. Um, Exactly. Alex made a really good point and said one piece of advice that he's taken is that you always want to just wait for the next trend, like be patient for the next injury. Don't rush it. That's what I really think is a big piece, and kind of like what we talked about, patience. Charles, you're so welcome. I haven't talked to you in a long time, and I hope you're doing well. Okay, so two questions that Karina has when you get to it. One. Okay, so thoughts on Renko charts. Okay, so Rinkos, honestly, a lot of people are purchasing them and stuff, and I mean, what I would say is that they're kind of like Heikinashis. So it's an indicator type, it's an indicator basically in a candlestick, in a way. And I mean, I don't trade with them, so I can't really give my own like opinion on them because I don't use them. So if I use them consistently, I really would say, oh, these work, these don't work. For me, it's been regular candlesticks. Like I said, price action is king. So if you master that, that's what you all have to ask yourselves. Am I a great technical analysis trader right now? If you're not, that's a harsh reality, so you have to practice it because that is what's going to be reliant on you being a great trader and making a lot of money and doing any account. And that's what I would say is, so price action, price action, price action. You can make tons of money just off of that. And then what methods of training did I use for myself? Honestly, a lot of my own studying, because that's really what it's been. It's come down to me learning. You can read every book under the sun, but if you do not apply what you're learning, you will not be good. So people that I really looked towards were like Tina Logan. I used a lot of her stuff for different books. I'm trying to think. Really random YouTube stuff on price action. I bought different courses, etc. But really, like I said, a lot of reading. Naked Forex was a great book. and a lot of studying, a lot of my own studying, and just like really, like I said, getting in tune with what the market is doing and trying to understand it from the basis and refining my skill set. So everything that I'm telling you guys, refine, 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 that's what you have to do. Hugh, you are welcome. Um, and then let's see. Do you still use Ikanashi? No, I don't really because I don't scalp. So I use it a lot for scalping if you're gonna do it. So no, I don't really because I don't scalp. But you know, if you're scalping, it's definitely really really effective for that. So I would still say use the same price action skill set with a regular chart so that you can see the market for the live because the Ikanashi slows down your chart so much. So that's what I would say. Yeah, the only technical tools that I use is support and resistance, structure, and true trends, and that's about it. There, like I said, you know, if you understand Fibonacci, like, or you understand, that's the only thing that I really would say that has a lot to do with support and resistance. So if you understand support and resistance, then Fibonacci is something that I would really encourage you guys to study. Separately, it takes time to learn that, so definitely use it, but even for your trends to start, fib is used for big retracements and big extensions, et cetera. So I would say that's only useful for looking at true trend reversals from long-term type scenarios versus the trend that's at hand. Fib's not really going to help you much. So fib is cool for big retracements. And then Jeffrey, you asked me, if the trend has retraced quite a few times, is there a point where you would think it wouldn't make a higher high for how many times it's retraced? Well, if it has kept making the higher highs, then I don't really care how long it retraces. See, like for instance, right now, right? Like how price is moving. So you see, it's pulled back over and over and again, right? Because that's what it has to do. It's ebb and flow. So what goes up must come down. I'm not concerned with how many times it's pulling back or even how far it pulls back. Did I make a higher high the last time? So do you see how price just made a higher high? Does everybody see that? It's giving me a clue. Structure left me clues. What? Buyers are still very strong in the market. So what I'm looking at is where's my next place that I can slow down at? It just broke one. So bango, broke it. Um, then you see in what? As the time frame goes up, if I just put another support and resistance line, or I mean a resistance line, I guess that would be. Here's my next place. So I'm not totally past a resistance. I still have one more place to hit, which could be right in there. Because what plays is my support over here, plays the resistance in here, plays this resistance right there. That's my next point that I could say maybe I'm going to stop at. And then I could retrace back down, and then I could go back up. So who knows? But that's a good place to kind of start to look at. Um, let's see. You're welcome. Okay, yeah, Zach, you're probably gonna have to watch the recording, because basically, I mean, when you're saying when flipping $100 to count to, it's not a risk percentage. What I really talk about is that this is overall risky, so you really just gotta look at using the lot sizes that are gonna protect you and keep you in the game. So my advice was the 0.25 to start for your first build, and then you'll get the 100% return if you got a 400 or 40 pip trade that you took, which should be most of the trades that you're taking on the hour chart are going to be 40 pips, 400 micro pips plus. That's just how they roll. So that's what I always tell people is if you're taking the right trades and getting a good entry, every place that support gave me an entry on this chart, I gained 400 pips plus, right? So in here, support a line, here, support a line, here, support a line, here, support a line. So you really have to, like I said, if you take your own chart and you go through, you're going to see that. So that's why it is easy. Some of you guys are just kind of like rushing your entries or, like I said, taking charts and, I mean, taking trades and they're not necessarily, you're not necessarily getting the pip movement that you'd like to see or the returns. So now focus on better entries and you're going to get a good return. So I see people this is Karina, I see people post online a lot, their screenshots of this many pips and that many pips, and they say, done for the day. This confuses me because sometimes I can stare at my charts all day and they don't move even a little bit. I wonder how are these pip amounts possible each and every day. It, I, oh, is that what place to trade? So I just kind of answered that question. It's about your analysis, hun. Honestly, what that shows is that there is some flaw in the way that you're in your analysis, to where you're not strong enough to really begin seeing. Because I mean, people say that to me all the time. They're like, "How do you get a trade?" And "How do you take two trades a day? I don't see one setup." Or I've asked like clients, sometimes when we first started coaching, and it's funny, I'll be like, "Did you see anything in the market?" And they're like, "Yo, I watched the market the whole day and it didn't move." And I'm like, "I watched the market and I took four trades." So it's about kind of like your own mental towards it. And I think as you grow, you grow in your analysis, you're going to grow in what you see. So it's kind of like you develop a third eye. So does some of this make sense for how once you know the market's trending and you see, let's just say that it went and made a new high, what do you know that after it makes a new high it has to do? At that resistance point, it has to pull back, right? Right? So when it pulls back, where does it pull back to? The old resistance becomes its support. So mentally, you're putting together the story that what? Once it pulls back fully, I can probably get an entry if I start to align support and resistance, trend lines, indecision candlestick, boom. Then I know what? It's going to make a higher high. So I'm not pulling out my trade because what? It has to go make that higher high to follow the structural movement of a uptrend. So reminding yourself that is really, really key. And that's what I would say. I would encourage you to definitely practice on your support and resistance and structure, because that's going to do a lot with you being able to see movements and, big. So the people who are seeing those movements, they just have a little bit maybe stronger analysis. Oh yeah. Okay. So, um, I'm glad that it's making sense. Okay. So let's see. Do you draw trend lines wick to wick or candle to candle, or do you have any special rules in drawing them? No special rules that I have. You can see my trend lines over here. I just kind of like put that together really quick. So I didn't even really have much thought to it. You're looking at, once you have zones, where are my lows at, right? So where are my low points? Where can I connect the dots? See how every point on my chart touches? Support, 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 right? So some are touching the wick and the body, some are touching a wick, some are touching the body perfectly. Your trend line is not going to be magic or perfect. It's about showing you, like I said, because if there was if there was a place like, I guess, like, let's just say that the price was supposed to come to perfectly or magically, nobody's gonna be able to trade like that. That would be like a cheat code to trading, kind of. So that wouldn't really work out. What you're gonna see is, like, for instance, even over here, you asked me, so that I'm moving towards the next question. Support and resistance plays pretty much the same thing. Someone asked me, do I use channels at all? See how if you drew a channel, price is following kind of like that channel code. So meets resistance in here, not perfectly, imperfectly for sure. But if I put another line, or even if I pulled this line up some, meets resistance perfectly. Price had a support in here, a support in here, support here, resistance here. So every place it pulled back, it hit a resistance point, right? Horizontally. Same thing with the trend line going up. Every place it's pulling back, it's hit a resistance line. And every place it's pushed through, it's hit a support point. So channels, yeah, they're cool because you can use them as basically the same thing. And they're pretty much the same thing as the next question that Jesus is asking, as far as do I use triangles and like pivots and wedges and things? And yeah, you can kind of use exhaustion gaps, for instance, like, to show you guys something of what, maybe a scenario of what he's talking about, and I'll kind of give you guys some good resources for that. Would be like Tina Logan. She has really, really great books on like triangles, shapes, so pivots, flags, things like that, where it shows you market exhaustion. So kind of like, for instance, if I wanted to give an example, usually that's used mainly in pullback and in consolidation. So over here, you see how we're consolidated? So you have pretty much like an exhausted triangle, or whatever you want to call it. There's a lot of things that you kind of can call it, but I'm going to show you guys something. See how that's like shaped like a pennant or a flag? See how price got really exhausted, but really it's all just support and resistance. Here's your main support. Here's your resistance point. It kept going down to the lower resistances. So resistance, just until it finally got fully exhausted and it reverses. So some of us may know that as a W, some of us may know that as a pennant. At the end of the day, it was consolidation to a trend reversal, basically, or a reversal of the trend for a second to go retest an old resistance point. So I would definitely say do some research on those things. These are all price action skills that can get you, definitely skilled up and make you way better. And Tina Logan, Alex, you're so funny. Oh shoot. Well, I mean, I'm gonna be hosting a webinar a month, basically going into the new year. After I kind of take a coaching break hiatus. So you definitely will be able to. You'll be able to have access to different teachings on specific things, and I think that it's a cool way for me to teach and get a hold of a lot of people, even if it's just they get the recording. So yeah, for sure. And like I said, Tina Logan was the author of the book. I really recommend her for those types of things you want to learn. And besides that, anybody else have any more questions or any concerns, anything that didn't make sense, etc.? Or did we cover and answer most of what you've been wanting to know? And has this been effective? Does this make sense to you? Flip, I hope y'all take this pool back. Awesome. Cool. Well, I'm definitely so appreciative of all of you guys. Like I said, I have like mad love for a lot of people are like my homies on here, and then some of you guys I've never met. So I'm really grateful for all of you. And just like I said, I appreciate just your wanting to grow in your trading. Like that's a beautiful thing. And so like keep practicing, especially through the new year. Refine, because you're going to kill once you kind of go into that new place. So I'm definitely super excited to see what you do, and I'll have the recording done. So I'm really excited to see, like I said, flip some accounts, practice makes perfect. And from there we shall go. And I'll definitely, like I said, have those recorded links. So reach out to me if you guys need anything. And enjoy your Christmas if I don't talk to some of you guys. Like Merry Christmas and love all of you guys for sure. Um, there's different series. I'm sorry, I'm like reading the last questions, and you're welcome, you're welcome, you're welcome, you're welcome. But I would say you definitely would just go to Tina Logan's website, and you're gonna see like if you Google her, and you'll see all the different books. They tell you the different things that come with what you're gonna learn from them, etc. So you can buy them. She has like PDFs, and then I think you can get the paperback ones too. But awesome. All right. Well, everybody have an amazing night. I look forward to many more webinars and reach out to me if you need anything. I'll be shooting the recording out soon. Let me stop my screen share.